Thank you, Reese. Thank you everyone for joining in, right? We have an exciting agenda today that covers three key things. Coming off a challenging year 2023, there has been a lot of anticipation about market recovery. We'll discuss the current level of activity, which we are seeing in the global services market. We'll focus on trends we are observing providers. And of course, we'll talk about the rising prominence of global in-house centers, GICs, or global capability centers, GCCs, right? That has been a market which has been running on steroids for the past 1 to 2 years. We'll also delve into strategies for enterprises to grow and transform their GICs. Specifically, we'll explore how providers can play a crucial role in supporting these transformative initiatives. And at the end, we'll talk about actionable recommendations for both enterprises and providers as they think about maximizing the benefits of their collaboration. So with that, starting off, Ravneet, what changes are we seeing in the global services market in the first half of this year? Can you please walk us through that?
Sure, Akshay. So the global services industry, which refers to both the third-party outsourcing as well as in-house centers from your offshore and nearshore regions, has been witnessing a slowdown in growth since the last 1 year. While the post-pandemic years saw an accelerated growth in both the revenue and headcount numbers, and both of them grow in high single digits or double digits, the numbers have started to normalize since 2023. Factors like your macroeconomic disruptions, fiscal tightening, geopolitical tensions, and the resulting supply chain disruptions and mounting cost and price margin pressures have led the industry's growth rate to settle in low single digits. If we do a quick analysis of the sentiments of industry leaders, the various stakeholders, and the trends that are emerging in the first half of this year, we expect that this growth will further taper down as the various macroeconomic and fiscal challenges to business growth and pressures on margin continue to prevail. Based on the leading indicators of the industry growth over the first 6 months of 2024, we estimate that offshore nearshore revenue to grow at around 2 to 4% only, settling at just below the 300 billion mark, while FT headcount will remain more or less stagnant around the 10 to 11 million mark. Another factor, if you move forward, is that we can assess is the trends in center setups. So if you look at this over the last 1.5 years, it can be observed that center setups have stagnated around the 350 mark, around semi-annually. In line with previous years, offshore nearshore regions continue to dominate the setups, and tier 2-3 cities continue to see increased traction year on year. What, however, is interesting is to see the sharp shift in the split of GIC setups and provider setups. While providers contribute around 1/4 of the total setups in the first half of 2023, this has dipped down to less than 1/6 in just 1 year. While much of this slowdown is actually led by a lower propensity for capital expenditure in the uncertain environment, they're also a result of optimization of delivery portfolio, which was rapidly scaled during the boom period of 2021 and 2022. Now, this is a clear indication of warning bells for the outsourcing industry. On the other hand, interestingly, the increasing adoption of GIC model points towards a probable new normal for the global services industry, more on which will we cover in the coming slides. Now, if we just focus on the provider side of the story in the next slide, the fall in center setup aligns with the nearly stagnant provider revenues. Across both offshore heritage providers as well as most global majors, revenue growth has been minimal. In fact, many of the leading providers have reported no growth in the first and second quarter of 2024. With muted top-line growth and margin pressures, providers are struggling to maintain their operating margins. As presented on the chart on the right, majority of the leading providers are witnessing stagnating operating margins, if not a decline. Now, with this revenue decline and margin shrinks, the FT headcount, which comes on the next slide, is also witnessing a decline. Over the last 18 months, if we move to the next slide, yes, thank you, Akshay. Over the last 18 months, most of the leading providers have reported a decline in their headcount. As operational efficiency takes center stage, most providers are pushing back on backfilling vacancies and are reducing their hiring as well. In fact, most providers are using this slowdown in the industry growth as an opportunity to correct the overhiring during the boom growth period post pandemic. Interestingly, this decline in headcount is combining with stabilizing attrition rate, which indicates that the overall unfavorable sentiment is riding the industry right now. And in the near future, we do not expect things to get much better.
Oh, so that is story on the provider side, right? I mean, the other segment which we want to talk about, of course, is the GIC or GCC segment. I mean, as I mentioned in the beginning, that's a market on steroids right now. You pick up the newspaper every day, and there are 5 articles on how GCCs are growing and how they are providing more and more leverage to the enterprise. Udit, what is happening on that market? Do we actually see what we're reading up in news on ground as well?
Yes, Akshay, as you rightly mentioned, the GIC market continues to grow in an overdrive over the past 2 to 3 years, a trend that is evident from what we hear in the news every day. When we examine this $80 billion GIC market, we observe a steady rise in the establishment of new GICs globally, as well as the growth in the existing center setups. Now, despite the last year's challenging macroeconomic conditions, not only has there been an increase in a 16% increase in the number of new GIC setups over the last year, but we have also seen around 4 to 6% growth in the workforce employed, particularly in the offshore and nearshore markets, with the total employees now exceeding around 2.6 billion. And we anticipate that these figures will slightly higher than the previous year, right, in this year. We see growth across all industries, with BFSI and technology sectors being the front runners in the past year. If you go ahead, Akshay, to the next slide. Interestingly, what we see here is that most Fortune 500 and Fortune 1000 companies have already established their GIC centers in the offshore and nearshore geographies. But in the recent times, what we are seeing now is that Fortune 2000 companies and beyond are adopting this model. And in fact, more than half of the GICs established in the last 2 to 3 years were done by the firms who were first-time adopters of this model. There are, of course, several factors that are driving this growth in the adoption of GIC model, such as the cost, which has become a big pressure for the enterprises, and there's a drive to reduce costs from them. It has now become progressively easier to set up GICs in the offshore and nearshore locations as they have gotten much more mature to support these setups. And also, obviously, there's also availability of skilled talent at scale in these geographies. Now, if we move to the next slide, it's a common belief that every few years, there's a cycle for enterprises' preferences shifting between insourcing and outsourcing models. However, seeing the current macroeconomic scenario, along with the changing preferences of enterprises, we believe that this traditional cyclical pattern might be broken. And this time, the GSEs are here to stay. We foresee exponential growth in both GIC adoption and expansion of existing GIC centers. Enterprises are now more than ever want to retain core services in their in-house centers. They want to maintain tighter control over the company culture and are now seeing GICs not as cost arbitrage centers, but also as key players in driving their global mandates, much on which will be covered later in the other slides. Moving on to the next slide. Now, going forward, what we expect is the trend will continue to grow in the GIC space across all verticals and service lines. Within the verticals, we see manufacturing, retail, CPG, and healthcare and life sciences being at the forefront of growth, as these industries increasingly embrace the technology-driven approaches. While the TMT vertical, which has been historically been the front runner in the GIC space, we anticipate it to have a slightly moderation in growth given its maturity and base effect. Additionally, there's also notable traction in areas where GICs were previously underutilized. So more organizations are now entrusting their GICs with digital and data services, along with expanded responsibilities in marketing, supply chain, procurement, engineering, R&D services. So all in all, totally agreeing with what Ravneet said earlier, it seems GICs will continue to be the flavor of the season for the global services industry.
All right, that's interesting. So what essentially you are saying is this market is here to stay. It is no longer, a cyclical phenomena that you have 3, 4 years of outsourcing followed by 3, 4 years of insourcing. But we believe that GICs will continue to grow and continue to flourish, and we expect to see more and more GICs in the next 3 years, right? I mean, estimates suggest that there will be more than 500 GICs within India itself in the next 3 years. Now that brings us to an interesting point, right? So while yes, we are saying that new GICs are being set up, Vipin, are we seeing a change in mandate of the GICs which exists in the market as of now?
Uh, Using our proprietary four-stage framework, we have assessed more than 100 GICs to map their progression along the growth curve. What we have learned is that initially, many GICs were set up solely to leverage cost arbitrage. However, there's been a major shift. Today, most of the GICs are evolving beyond cost optimization, transforming into sophisticated service delivery hubs that cater to the broader and evolving needs of their parent enterprises. The real inflection point comes at stage 3 and 4, where GICs become more mature and start driving strategic initiatives, creating tangible business value. But it's worth noting that less than one third of the GICs have reached these advanced stages. Currently, about 70% of the GICs are still operating in early phases of development with a strong focus on cost optimization rather than strategic value creation.
That's interesting. So I think, Vipin, what you're saying is there's a sizable chunk of the market, almost 60-70%, which is still in that initial two stages where enterprises are still leveraging them for, more from a talent and cost perspective. That being said, 30% of them have now moved beyond to a stage wherein, they are driving large scale transformations, strategic initiatives, right? Again, that brings us to the first poll question. Reese, if we can have the poll up. Again, the question, and this question is purely for enterprises. The question is, do you think your GIC operates as a strategic partner? 4 options. Yes, it does. Second option, not yet, but we do have plans to do it in the next 12 months. The third option is we expect this to happen in the next 3 years. And the last one is, of course, our GICs are more from a talent cost. We don't expect to run a lot of strategic transformation initiatives from these GICs. It would be interesting to see if the findings of this poll align with, what we have been seeing based on our research, at least from a broader market perspective, right? Maybe we'll keep the poll open for 15 more seconds. I'm seeing the results, and by the way, the results seem slightly different than what we have been saying. Again, of course, there's a difference in sample and other factors. And yes, now the final results are up. So what the result at least here shows that almost 45% of you believe that your GICs are, either doing it. 25% believe that it is doing it already, while remaining 75% believe that it is not there yet, out of which 60% are actually thinking that they will start leveraging some of your existing GICs from a strategy point of view. Interesting. All right, moving on, right? So again, we spoke about how things have changed, how GICs have improved. Now that brings us to a very interesting point. What has fundamentally changed in this market as we have seen this huge growth in GIC segment? Vipin, do you want to talk about what we are seeing from a service provider point of view?
Sure, sure. There has been a fundamental shift in how enterprises view service providers. Just 3 to 4 years ago, enterprises were facing an either or challenge, either invest in growing their GICs or outsource to providers. Both models were often perceived as growing at the expense of one another. But today, we are seeing a strategic shift. Enterprises are increasingly open to leveraging service providers as strategic partners to grow their GICs. This means GICs no longer view providers as competition, Instead, many GICs are actively collaborating with providers to accelerate their growth and meet strategic objectives. Uh, in the next slide, we are covering the voices of the what we are hearing from both enterprises as well as service providers. As highlighted earlier, the growth of GICs is no longer happening at the cost of service providers. Both enterprises and service providers are aligning to support GICs in achieving their mandates. However, both have different aspirations. For instance, some enterprises prefer to keep their core work in-house, outsourcing only non-core or transactional activities. Others may aspire to retain work in-house but lack the necessary expertise or operational know-how on how to do so. In these cases, providers are stepping in to fill critical gaps. Moving on. Uh, Enterprises are increasingly seeking support from service providers for a range of reasons. Primary ones being talent scarcity and cost pressures. Many of these enterprises, especially as Udit pointed out, especially beyond the Fortune 2000, are first-time adopters of the GIC model. And while they may understand the market at a very high level, they often lack the expertise needed to run an in-house center. They might also face challenges accessing niche or advanced technologies. For all these reasons, we are seeing enterprises turn to service providers for their help in setting up and managing their GICs.
All right, that makes a lot of sense, Vipin. So essentially what you're saying now is enterprises are much more open to partnering with a service provider or a provider to drive growth in their GIC. A big portion of GICs no longer see providers as competition. They see providers as someone who can support them in their growth. Ravneet, how does that impact the broader service provider ecosystem?
Actually, with the more and more GICs coming up, this has been a big opportunity for the provider segment as well. And we are witnessing growing evidence of enterprises seeking provider support across the entire life cycle of GICs. Now, if you look at a GIC, there are three major events in its life cycle. The first and foremost is its setup. Then, as the GIC matures, we see multiple transformation agendas coming in. And eventually, in some cases, we do see the sunset of a GIC. Now, providers are increasingly supporting GICs across all three major life events. While setting up a GIC, providers are supporting either through an assisted model, or they're establishing a joint venture, or even in a lot of cases, a build, operate, and transfer or a BOT model. On the transformation end as well, providers are now providing right talent or using their domain expertise to bring about digital transformation or process transformation. In fact, in a lot of cases, we're also seeing that providers are bringing about a complete overhaul of the operating model of the GIC as well. And lastly, in cases where we see enterprises looking to close down a GICs, they again seek help from providers. In giving them full control over the GIC and the service delivery, which results in a win-win situation for both of them actually. So if we see closely, the growth of GICs does come with a big opportunity for providers. And for today's agenda, we will be focusing on the opportunities in the GIC setup domain. In this domain or the GIC setup arena, we will see that over the last 3.5 years, close to half the GIC setups today are now being supported by providers, which was something that was not the case, say, around 5 to 10 years back. Majority of center setups were done by enterprises themselves previously, but now with more and more cost pressures, the need for a speedy market taking center stage, more and more enterprises are now engaging with providers. So be it India-based providers or global majors or the likes of big four consulting firms are now being seeked out to help set up GICs. You can see multiple examples on your screens, and there are obviously a variety of reasons for it. It could be the preference towards, the lack of market knowledge or product and cost inefficiencies, the talent-related concerns, as they were discussed by Vipin previously. Moving further, we also see that within this setup, the provider-assisted setups, there are three primary models which are being leveraged heavily. First is the assisted model, where the provider majorly takes care of the administrative and legal aspects given its local market knowledge, ensuring a successful setup. The management control and ownership in this remains with the enterprise itself. While the provider is not involved in the operations of the GIC, there are cases where under the assisted model, providers may provide some delivery resources as well. In the joint venture route, both parties co-invest and play a role in both setting up as well as running the delivery center of the GIC. A third route, which is now gaining more and more interest, especially given the cost pressure, is the build, operate, transfer or the BOT model, where provider takes up the initial capital investment, sets up and runs the GIC with 100% management control. Now, the parent enterprise may have some resources which shadow the GIC leaders and understand how the GIC functions. But this is something that happens for a few pre-decided years, post which the full control of the GIC is shifted to the parent enterprise along with the delivery resources.
So Ravneet,
On the next slide, sorry, Akshay, please go ahead.
You mentioned the share of provider assisted setups has gone to 50% from 30% few years ago. That's a big jump, right?
Yes.
How does that look when you start thinking from these three models perspective?
Great. So if we move to the next slide, we'll see that there has been a shift in the preferred mode of provider-assisted GIC setups as well in the recent years. Initially, we would see that assisted models was the go-to model, and JVs was something that was around the 30%, 20-30% mark, and hardly any BOTs were happening. But over the last 3.5 years, provider-assisted models and BOT models are now making up close to the 90% of total provider-assisted GIT setups. BOT especially has grown like a phoenix, as you know, the macroeconomic and fiscal environment has undergone a shift. Lesser JVs are now being preferred, obviously, given the inherent legal and administrative complexities of the model, as well as, you know, the conflict of interest between enterprises and providers, which have different aspiration and mandates from a co-JV GIC. So to answer your question, yes, there is a big change, and BOT and provider-assisted models are the go-to models right now.
All right. So essentially what you're saying, Ravneet, is 90% of the setups almost are essentially either assisted virtual or a BOT.
True.
We are not seeing a lot of JVs because they are very complex. Udit, why don't you explain to the audience what each of these models mean and what are the implications for an enterprise and a provider?
Sure, Akshay. So let's look at assisted model first. Enterprise often prefer an assisted model because it provides them with greater control. In this model, the enterprise retains full management control and is responsible for overseeing day-to-day activities and steering the strategic roadmap of the GIC. The employees hired are theirs from day one, ensuring a higher governance standard. The provider, on the other hand, offers market expertise, assists with entity setup, recruitment, and sometimes provides delivery resources. As hinted by Ravneet earlier, the assisted model is preferred by enterprises with prior GIC setup experience, a strong understanding of the local market, and the ability to manage service delivery effectively, which allows them a much faster speed to market through this model. Now, if we move on to joint venture model, as discussed earlier, in a JV, the enterprise and the service provider co-invest in operations and share management control. The JV entity is co-owned by both parties, typically on a 50-50 basis, with operating costs split in proportion to their equity holding. So typically, the enterprise and service provider jointly manage the entity. The day-to-day operations are initially overseen by the provider, but they are generally then went on in a joint model. This model requires a higher level of governance as it involves managing a separate entity in partnership with another organization. However, as Ravneet mentioned earlier, the JV model can present administrative complexities, especially when strategic visions diverge between the two parties. Critical decisions require consensus, which can sometimes lead to delays or frictions in decision making. So hence we see JVs losing appeal to these enterprises these days. Moving on to the bot model. So enterprises are increasingly adopting the bot model, especially because they aim to minimize initial capex associated with the new center setups. In a bot model, it's the provider that is shouldering the initial capital investment and setting up and scaling operations. At the beginning, the enterprise doesn't have to worry about the governance since the provider is responsible for building and running the center while sticking to the agreed service line agreements. Provider may even use their own bench staff to scale the GIC operation initially. Now, for a set period, which is usually around 36 months, the enterprise has the option to exercise the transfer and take ownership of the center. In most cases, pre-agreed upon transfer fee is already decided that the enterprise needs to pay to the provider for the assets and the ownership to be transferred to them. Now, let us see why bot model is resurging in these recent years. So if you move to the next slide, Akshay, thank you so much. As Ravneet mentioned earlier, we see a significant shift with an increased preference toward bot model for provider-assisted setups. This is mainly because in a bot model, enterprises benefit from the comprehensive support covering everything from legal entity creation to real estate selection, technology infrastructure setup, to scaling talent and managing operations, all with minimum CapEx or no upfront investment. Additionally, through their provider, enterprise will gain access to established ecosystems, proven playbooks, local market expertise, and seasonal industry experts, which will help them build strong leadership in the GICs that they eventually acquire. On the provider side, engaging in a bot GIC setup allows them to maintain existing client relationships and secure future revenue streams. These also act as a strategic entry point to win new clients for them.
All right. So if let me know if I got this right, right? There are three predominant models. You have assisted, you have BOT, build, operate, transfer, and you have JV, right? If I'm an enterprise and I have experience in managing GICs or GCCs, I am likely to go with an assisted model because I know how to manage service delivery, right? I might need support from a provider because I might be new to a geography where I might need support from a legal entity perspective, administration, finding the right space, right microsite, setting up the enabling functions. Is that fair?
Exactly.
If I'm an enterprise, I don't have a lot of experience or I'm pretty new to the geography, I might go for a BOT. So I might ask a provider to set up the GCC or GIC for me, run it for a few years, and then I have the right or the option to transfer it back to my enterprise account, right? So that's where I use a BOT. JV, again, as we said, not very prominent anymore, but we do see some JVs still happening, very few. But essentially, that's when we have strong relationship with the provider. We are confident in the mutually beneficial relationship, and that's how we go for a joint venture GCC. Is that a fair representation of what you said?
Quite well summed up, Akshay.
All right, perfect. So now what this means, and we come to our second poll. So Reese, if we can have the poll up, right? While we have discussed all of this essentially means that as a provider, you need to have dedicated practices, you need to be focused, you need to be programmatic about this segment. So the poll is all about, have you done something similar within your organization? And this is for providers only. This is about, have you started focusing on this segment much more programmatically? First option, yes, you have. Second option, yes, you want to do it. It is underway right now. Third option, not right now, but do you plan to invest in this market strategically? And the last one is that you are looking at this market purely from an opportunistic lens and not from a programmatic lens. Maybe we'll give 20 seconds to see where how our numbers turn up. I expect a bulk of our numbers to be between option 1 and option 2, because again, based on our conversations with multiple providers across the market, right, we are seeing more and more providers being programmatic about this segment. Either they have done it already, either they have already have business units, or they are in process of doing that. Maybe 10 more seconds, and then we'll share the results. Maybe we can end the poll now, see the results. All right, so we see that almost half of the providers present here today are saying that you've already ran initiatives to, be more focused on this segment. Remaining 30% again are right now undergoing, right? And we see very few providers, less than 20%, who don't want to target this market generally, or they want to target the market strategically. So fantastic. Again, very encouraging signs for both the enterprises and the provider side. So Vipin, as we think about this, right, what are providers actually doing as they capitalize on this opportunity?
As the poll indicated, Akshay, providers are shifting focus and building capabilities to leverage the emerging GIC opportunity. To support the GIC setup needs of the enterprise, service providers are increasingly adopting a more programmatic approach. Leading providers are setting up dedicated business units to cater to the unique needs of GICs. These focused business units offer services like assisted setups, BOT, and a bunch of other capabilities such as transformation and sunset requirements, which both Udit and Ravneet highlighted. Most providers also have dedicated teams for targeting large deals and process optimization to meet the cutting edge needs of the GIC clients. In the next slide, we are finding providers are finding innovative ways to differentiate themselves in the GIC market by leveraging their strengths. For example, one global major has set up a dedicated business unit and specialized account teams to collaborate with enterprise sales to grow GIC opportunities. An Indian heritage provider has built dedicated teams for each stage of the bot setup process, allowing them to accelerate delivery timelines. Meanwhile, a specialist provider is offering targeted support for small and medium scale enterprises looking to establish GICs for MSMEs. In the subsequent slides, we have identified key focus areas for providers to succeed in the GIC market. Providers need to enhance their visibility regarding their capabilities in this space and demonstrate ways in which providers can offer value. GICs are increasingly expanding into tier 2 and tier 3 cities to access talent and reduce costs, making local presence a key criterion for providers hoping to be shortlisted. Flexibility in commercial structures, a shared risk approach, a strong cultural fit are equally critical. Finally, having the domain expertise to drive further growth and help GICs evolve in line with their strategic goals is becoming a fundamental prerequisite for service providers.
So
Over to you.
Vipin, what you're saying essentially is helping an enterprise setting up a GIC, whether it is assisted or a BOT, is fundamentally very different from an outsourcing contract. When you're setting up a GIC, you are actually dealing with, either the C-suite, the head of talent, head of HR, head of finance within an enterprise, right? And that is very different from when you are dealing with a procurement team within a service provider. Additionally, as you set up GICs, and I was going to the questions which some people have asked, right? The biggest thing which enterprises want within a GIC is for the provider to ensure that the culture within that center is the same as the culture in parent enterprise. So some of the softer elements, right, become really, really important as providers think about supporting enterprises on GIC setup pursuits. Interestingly, we did a peak report on this market earlier this year, right? So peak is essentially an evaluation of service providers which play that market. We had almost 24 providers which we have evaluated as part of the peak matrix, right? Again, while the peak is up on the page, what we realized based on this is, and this is linked to what Vipin was saying, we are seeing increasingly a lot of providers being extremely programmatic and structured as they focus on this segment, which means they are becoming conscious that they have to target this segment and they have to be really, really structured as they go in this segment, right? Which includes, let's say, having their own business units like any other vertical within the firm as they think about targeting this segment. What this also means, and this brings us to the last section of the webinar today, right? Now, there are a couple of questions. And we spoke about how, enterprises are partnering more and more with service providers, how service providers are also becoming more awakened to this opportunity, right? What does that mean for both of these segments? From an enterprise perspective, there are three big imperatives. The first one is, as we saw during the first poll as well, you have to consider your GICs as areas from which you can drive strategic initiatives, right? We are seeing the market shift as we spoke about the stage one, stage two, stage three, stage four. We have seen the market shift from stage one to stage two to stage three, right? And now we are seeing some GICs even going to stage four of the life cycle, which means they are running large scale transformation engagements for the enterprise. The second more important aspect is, while yes, traditionally enterprises and GICs both have seen providers as competition, that notion is slowly changing. And that is our recommendation to a lot of enterprises as well. It is right now, the time is about strategically leveraging a provider to either set up new GCC or even grow your GCC based on the gaps which you see in your own capabilities. And essentially what this also does, by the way, is that it helps you speeden your approach to market. It helps you minimize your risk as well, right? So these are the three basic recommendations which we have for enterprises in general. Now, when you think about providers and what they should be doing as they think about capturing this segment, right? Often we hear, and we read this in news as well, that GICs are growing, they are taking business away from providers. Yes, partially that is true, right? Because enterprises, they want to retain, let's say, core things in-house. They might want to outsource some of the non-core traditional work to providers. But what this means is there's an opportunity for you to support that enterprise or that GCC as they start insourcing some of these things. A lot of these GICs, a lot of these enterprises don't have the expertise and need that hand holding from a provider as they grow some of their in-house centers, right? So number one, please consider the GIC market as a major opportunity for you to support in the enterprise growth as well as your growth. It is very important for you as a provider to have a structured approach, which means, let's say, have a dedicated sales team, have a business unit which is very similar to a vertical which you already have within your organization. Hire people who have background in, let's say, GIC business so that you get that connect, you understand more about the market, right? The third thing which we have seen, which has helped a lot of providers, is essentially developing your own GIC specific value proposition. As we spoke about this, right? GIC market operates very differently than any traditional outsourcing contract. The stakeholders are very different. The stakes are very different, right? You need to be out in the market. You need to tell the market that you are a major player in this segment. You have done enough work. You are actively, supporting other GICs, and that is how you make a mark in front of other enterprise clients. And the last one is, compared to outsourcing models, there are different commercial models which different deal types have. For example, an assisted deal will be very different than a BOT, which will be very different than, let's say, a provider carving out a GIC. So within your firm, you need to ensure that you have expertise to solution all these different deal types. You know what levers to pull at what stage, what will make the deal sweet for the enterprise, right? So that again becomes a very big recommendation from us to the broader provider audience. Now, with that, this brings us towards the end. Now, as part of today's webinar, we are offering two reports which you can you can download one of them from the webinar itself. Soon, the Zoom admin will put a link in the chat box. Please select if you want to download the Market Vista Q3 update, which talks about what is happening in the broader market. The other report on offer is essentially on the talent demand trends in India, which we see from an IT services standpoint. And now we'll open the stage for Q&A. Now we have received a lot of questions in the chat, and we'll start taking them one by one. So Udit, I think one question which you've received in the chat is, are GICs or GCCs limited to certain verticals? I mean, for example, everyone is talking about BFSI or TMT. Do we not see GICs in other verticals? Do you want to take that?
Sure, Akshay. I think the GICs are vertical agnostic. We do see some sectors having more traction. Let's say BFSI, healthcare, and TMT has always been the forefront runner. But what we see now that it's agnostic of the kind of industries that we see. It's all the industries are adopting GICs these days.
Thank you. The other question which we have received is some more insights on what kind of providers do we see in the broader market. So let me take that up myself, right? So in general, we are seeing three kind of providers which have started to come up in the broader GIC setup market. On one hand, you have the SIs which have been in the broader market for the past so many decades, right? So the service providers in general, right? So the Accentures, Cognizants, Infosys, TCS of the world. They are a big players. They are big players as far as the GIC setup market is concerned. The second segment is essentially your advisory or consulting focused providers, the likes of EY, Deloitte, PwC, right? Which have also started focusing on the services section. So while these providers are already helping GICs or enterprises on the advisory side on, let's say, setting up GICs, now they've started playing on the managed services, on the services side as well. So that is the broader second segment. The last segment is essentially of your specialist players. So the likes of ANSR or a Globplax, right? So these providers essentially help lot of enterprises primarily in the assisted model, wherein they help enterprises in setting up the legal entity, the enabling services, the incorporation, the location strategy, and whatnot. But generally, they don't really handle service delivery. So that's broadly how we see the broader provider market, which is focused on GIC setups. The next question we have received from someone, and Vipin, why don't you take this one, is what should a provider do as it thinks about targeting this GIC segment as a strategic opportunity? What are some of those, 2-3 key items they need to keep in mind?
Sure, Akshay. So what we are observing is that enterprises are actively seeking support from service providers, creating a significant opportunity for providers to step in and assist. Many providers are capitalizing on this demand by establishing dedicated business units and specialized teams focused on supporting and growing the GIC business. That's what we are observing in the market.
Perfect. So what essentially you're saying, Vipin, is it's time to be extremely laser focused on this segment and not, approach clients opportunistically or wait for them to come to you. It is about you going out in the market, you talking to enterprises, GCCs, having a dedicated sales team, and that is how you can A, help enterprises, and B, of course, help in your own growth as well.
Absolutely.
All right, perfect. One question on the broader market in general, and maybe we'll take this. Ravneet, the question is, what is our forecast of H2? How do we see that in the next few months? And then if you can draw out some differences between GICs and providers in general.
Great question, Akshay. If I have to look at what's happening in the market in the second half of this year, some positive trends are coming out. And let me take up GICs and providers separately. If I look at GICs, they are the flavor of the season. They continue to see growth. Even in the third quarter, more and more, we've seen a lot more center setups happening, more and more new entrants into this market. So yes, on the GIC side, on the insourcing side, we do believe that this will continue to grow. If I look at the provider side, which has been more muted in the last 1.5 years, we are seeing some green shoots now. We do expect this market to start doing better. We do expect the revenue numbers to go up a little more than what we've seen in the first half. And operating margins as well as headcount growth to be in the green this time. So overall, we should believe that the market will do better in the second half of the year as compared to what has been the trend in the first half. And that should result in a moderate, normalized growth for the market for the whole year of 2024.
So, Ravneet, what you're saying is providers, while we have seen some green shoots, there are still some concerns. But from a GIC market perspective, we expect to see higher growth numbers in H2 with all the news surrounding GICs and articles and new setups happening. I'm pretty sure we'll see a pretty healthy growth rate as far as GIC market is concerned. All right, one other question which we want to take is besides US, what are some of the other key markets which have significant share of GICs in India? So I'm assuming this is from a headquarter perspective. Vipin, do you want to take this?
Share of GCCs in India.
So the question, Vipin, is which other source geographies do we see setting up GICs within India besides US?
Understood. So majority of the GCC setups we are seeing besides India is in Philippines and some part of Central Eastern Europe and other parts of Europe is what we're typically observing, with some bit of traction in the LATAM markets as well.
All right. And I think just to add to that, Vipin, right? From a source market perspective, I think we are seeing GICs. Of course, US is one of the biggest contributors, but beyond US, you are seeing firms from UK, Germany, France. By the way, we are now seeing a lot of companies from the broader Asia Pacific region as well setting up GICs, right? So, for example, a lot of Japanese firms, Korean firms, they are also setting up, GICs, whether it is in India or Philippines, right? Some of these low or mid-cost geographies.
Akshay, just to add on to that, we also see a lot of northern countries these days setting up centers in India. That's another trend that's coming up.
Oh, that's interesting. So what you're saying is companies headquartered in Nordics, they are setting up GICs in India. That is also something interesting. All right, we have quite time to take one more question. So the question is, how do we see branding? How important is branding in GIC versus a provider, right? Versus a provider ODC? Let me take that question. So for an enterprise, it is very important that the center they set up looks and feels like any of their other offices. Without taking names, there have been large enterprises who have had, who don't have, let's say, a market presence in India, but have GICs in India, yet they are doing their board meetings out of India. What that means is for a lot of mature enterprises, GICs are just an extension of their own offices. So what that means is branding, ensuring that people have the same culture is very important, right? So you will witness this in the offices they will set up. You will witness this in, let's say, the kind of people they hire. You will witness this even from the perspective of the kind of salaries they pay, right? So while let's say for a certain process, a provider might hire someone from a tier 2, tier 3 university, a GIC might want to focus on a higher caliber of university. Again, this is purely from a university hiring program. Similarly, from a lateral hiring perspective, again, these facts stay true. So culture, branding are very important for GICs as they, think about setting up their centers and growing their centers. All right. With that, we would wrap up today's webinar. I want to extend a heartfelt thank you to all of you for joining us and engaging us in this discussion. Just to recap, right? What we have covered today is, of course, what we are seeing from a market perspective, what is our expectation of the market in H2 this year. Second, we spoke about how are we seeing the broader GIC market? How are we seeing the role of providers as enterprises set up or grow their existing GICs? And the last one is we spoke about what are our recommendations for enterprises or from providers as they think about their collaboration and maximizing the benefits out of it. Again, we hope that you find this information valuable. And of course, the copy of the webinar presentation will be available to the participants. Thank you all for joining in. Have a good day and good night. Bye-bye.